You're self-employed or you're a small business owner who uses your car for your business quite often, and you're trying to decide between the standard mileage versus the actual expense method to deduct your vehicle expenses. Hi, I'm Matt, EA with Ahn Company. Today, we're diving into this topic that could save you tons of money on your taxes. Choosing the best way for deducting your vehicle expenses. Let's get started. Many business owners out there get confused about which method to use. Choosing the wrong one can cost you hundreds or even thousands of dollars. So let me break it down and make it crystal clear for you. The standard mileage method, that is the one that is simpler than the other. The IRS sets their standard rate per mile each year. In 2024, it's 67 cents per business mile. This 67 cents per mile is meant to cover all your car-related business expenses, including your gas and insurance and etc. Pretty much everything that you can imagine. The actual expense method, on the other hand, it involves tracking all your actual vehicle-related expenses. That includes your lease payment, oil, gas, your repair, maintenance, depreciation, insurance, registration, and so on. And you only deduct the percentage of these all expenses that relate to your business use. So, how do you know which method is right for you? It all comes down to two factors: your vehicle cost and the mileage you drive for your business. To help you decide, let's have a look at this table with two examples. First example, high cost, low mileage. Let's say you lease a high-end car. This is an expensive one, and you use it for business only 10% of the time. You drove 1,000 miles for business. Your dream car costs $12,000 for lease payment annually. Since your car is relatively new still, that you didn't spend on maintenance, $150 for registration, $3,000 for insurance, $1,500 for gas, and $500 for oil change, therefore bringing your total and annual cost down to $17,150. Using the actual expense method, you could deduct 10% of that amount, which is $1,715. Keep in mind, this example excludes depreciation for simplicity, but adding it would increase your deduction even more. Compared to this actual expense method, the standard mileage only gives you $670 deduction, which is less than half of what you get with the actual expense method. So in this case, the actual expense is more beneficial. Now let's look at the second example here, low cost, high mileage. Imagine you run a business that requires daily driving, like Uber driver, that leads to 20,000 business miles in 2024. That is 80% of your total use. To keep the cost down, you stick with an economical car with $3,000 annual lease payment. You paid $500 for maintenance, $50 for registration, $1,500 for insurance, and you paid $3,000 for gas and $1,000 for oil change since you drove a lot. Therefore, bringing your total annual cost to $9,050. With the actual expense method, you can deduct $7,240, which is 80% of the amount. But with the standard mileage method, you can deduct $13,400, which is 20,000 miles times 67 cents. In this case, the standard mileage method nearly doubles your tax deduction compared to the actual expense method. Okay, what did you think about those two examples? Does one of those examples look like your own situation? If yes, that's great. I'm glad. You might also say, hey, I have my own car. I don't have any lease payment going on, and I use my car for business at 10%. So my case would be low cost, low mileage. What should I do? In that specific scenario where you have no lease payment and you use your car for business less, the standard mileage method is almost always the better option. Think about it this way. The lease payment, which is the key deduction in the actual expense method, goes away, which makes the mileage-based approach much better. Let's have a look at this table real quick. Low cost, low mileage. You had 1,000 miles for business, which was 10% of your entire use. You did not have any lease payment. You didn't pay for maintenance. You only had registration, insurance, gas, and oil change, which is in total $3,650. With the actual expense method, you'll be able to deduct $365. The standard mileage method will give you $670 deduction. In this case, standard mileage will give you a higher deduction. So here's the general rule. High cost, low business mileage. If you have any significant expenses like high lease payment and higher than average insurance premium because you have an expensive car and you use your car way less for business, the actual expense method is typically more beneficial. Low cost, high mileage. If you keep your costs relatively low, like minimal lease payment and below average insurance premium, and you use your car way more for your business, then standard mileage method is generally giving you a higher deduction. Remember, tax situations can be complex, so it's always best to consult with qualified tax professional for your personalized advice. All right, that was all for today's topic. You can find more information from the IRS page. I'll have that link in the description. If you have any questions around your taxes, feel free to reach out. My contact info is in the description as well. If you find this video interesting, please hit that like and subscribe buttons. Thanks for watching.